Finance fam, welcome back to my channel. In today's video, we are going to talk about real estate, the beloved asset class of Americans. As a matter of fact, most Americans hold most of their wealth through real estate. The real estate market has gone through a roller coaster since 2020. It's not the first roller coaster we've seen, if anybody was around in 2008. But in today's video, I want to talk about the key considerations when buying a home and avoiding getting caught up in what a lot of people are caught up in today with declining housing prices. The fact of the matter is, housing prices over the long run do go up over time. Our monetary policy is literally designed to try to manage spurring inflation, but not too much inflation to cause us an issue, which we saw what happens when inflation causes us an issue in 2020. So of course, naturally, real estate prices go up over time because just in general, everything costs more over time due to inflation. So this is actually what makes owning real estate a great way to hedge against inflation over the long run. And generally speaking, if you plan to hold your home for decades, the odds are when you go to sell it later, it's probably going to be worth a lot more than what you paid for it. Now, do not conflate housing price appreciation with the actual return you have on your home. Those are two completely different things. Just because your home appreciates in price does not mean that you actually had a positive return on that money that you put into it. You could end up with a negative return, but your house can still appreciate. This is due to costs that come with owning a home, and they need to be accounted for whenever you're doing that calculation to find out your return on your money. With that said, I came across this tweet with this image that really shows which parts of the United States have been experiencing price declines in their real estate market and price increases in their real estate market. And it really goes to the crux of the issue that real estate prices do not always go up in the short term. In fact, we've seen the 2008 financial crisis where prices crashed significantly, causing people a lot of trouble. It took many years for housing prices to recover from that 2008 crash. But we have recently seen a lot of housing price declines in many different markets around the U.S. Very big markets. Austin, for example, New Orleans, San Francisco, Punta Gorda in Florida, Phoenix, Arizona. So a lot of places have actually seen these price declines. And if we zoom in, we see that the West Coast has really seen price declines along with Central Texas. These are some of the markets that had some of the biggest booms. So I know what you're probably thinking. Well, yeah, Nikki, these prices have declined in these areas, but they had price increases, significant price increases. So we're probably still, a lot of these homeowners are still doing okay. And that is probably the case with a lot of people. However, where the issue is people that unfortunately had bad timing in this market, 2021, 2022, the peak of the market, and they didn't have a long enough time horizon to stay in their homes, or their circumstances changed, and unfortunately they are now in a situation where they're probably going to have to come out of pocket to be able to leave. We'll get into that. But what's interesting in this chart, just a fun notation, is how the West Coast has seen the declines and the East Coast has actually seen a lot of price increases in their real estate. So I do want to be clear, housing declines are not happening across the full United States. It's in certain markets, but it's in pretty big markets, pretty popular markets. But it is interesting to note how people are loving or migrating to the East Coast. Austin is a market that I am personally familiar with because of living there, and I did see this whole thing happen in real time. In fact, I had friends that were buying up homes to try to Airbnb them like crazy in 2021 and 2022, and I've spoken to many of them, and they've talked to me about the fact that they've tried renting these houses out, but the market rents dropped because just the market dropped. And they are not able to cover their mortgage with the rents, whether it's from an Airbnb or whether they have a longer term tenant, a year lease tenant in there. So unfortunately, a lot of people that I do know are falling into this issue that real estate prices declined, their mortgage is higher because they bought at a higher price, then the rents declined with the housing market in general, and they can only charge market rent. And if market rent is low, then they're not covering their costs, right? And they're having to come out of pocket, and they have a negative cash flowing property. The issue that I see a lot with the housing market is people think that real estate prices won't go down. If you follow TikTok and you follow all of these real estate influencers, they're very, very bullish on real estate. They try to convince you that you should be investing no matter what, taking out HELOCs, taking cash out, and reinvesting that into new places, and so on and so forth. And in certain markets, that works. But in other markets, it doesn't. And this is part of knowing what your real estate market environment is, so that if you're an investor or if you're just needing to buy a home, you're not making any large mistakes that are going to strap you if you can't afford to be negative cash flowing. So I would be as bold to say that when it comes to buying real estate, if you don't have a very long time horizon, or you don't have the emergency savings to pad yourself in a scenario like we're seeing today in certain declining markets, timing the market is going to actually be really important. And you're not going to hear a lot of people say that. Timing the real estate market is not something that people tell you to do, because it just seems very difficult, and housing prices go up over time. But we have to be thinking about these shorter term time frames that we've seen. 2008 financial crisis being one of them. The hype usually dies, and that happened in 2008, that happened in 2020, hype everywhere, and certain markets are continuing to be hyped and holding on to their price appreciation, but a lot of markets aren't, and that hype has completely died. And the markets that go the highest usually crash just as hard. So that's important to keep in mind when you're looking to buy real estate, especially if you're a real estate investor. The interest rates have to align, the market sentiment has to align, the market environment has to align, and the prices have to align. So if you're noticing very high price increases in a certain market in a very quick period of time, that should kind of be giving you some pause and saying, okay, this is a hot market, I have FOMO, I want to get in now, but am I about to fall into a trap? Another consideration when it comes to buying real estate is thinking through where we're at in the monetary policy cycle. Interest rates, right? We have now seen housing affordability plummet in the United States, and a lot of this has to do not only with rising housing prices, but interest rates. The Federal Reserve controls interest rate policy, so they are the ones raising interest rates and lowering interest rates. Now, this is the 30-year fixed mortgage rate over the past decade, and it's been very, very low. In fact, it absolutely plummeted to under 3% back in 2021, which is wild, and some people actually got to lock in their mortgage at under 3%. If you did, congratulations, you're one of the lucky ones. But then inflation started to take a chokehold in America, and the Federal Reserve had no choice but to start to raise interest rates. Well, what happens when you raise interest rates? The mortgage rate is going to go up as well. So is your savings interest rate if you have savings in a savings account, right? So this has really dampened housing affordability in the United States because of monetary policy. And some of the macro data matters as well, right? We want to be looking at inventory. What does housing inventory look like? If it's higher, maybe housing prices will be a little bit more reasonable. If it's lower, like we saw over the past few years, housing prices are going to go up because supply and demand. So thinking through the monetary policy environment and the macro environment is something that can kind of help gauge what you should be doing or what you should not be doing when it comes to buying real estate. Now, of course, you can always buy now and refinance your mortgage later. But the problem with that is we don't know when interest rates are going to go back down. In fact, the odds of the Federal Reserve lowering interest rates keeps declining. It doesn't look like it's happening in the June meeting, and it looks like a very small chance that it's going to happen in the July meeting. And so the more data we get, the more that the odds of interest rate cuts this year keep getting pushed out. So if you put yourself in a situation where you can't really afford the home, but you're buying it because you know you're going to refinance later and you're just waiting for that, you could end up where you're waiting longer than you thought and you're having to pay a lot more money than you expected and you can't afford it. Another consideration when buying a home is thinking through the risks of you needing to move again sooner than later. So most people, when they're buying a home, you really want to be thinking about staying in that home long term. I would say at least 5 years or more at a minimum. And the reason for that is because there are a lot of costs of home ownership. And if we look at a mortgage calculator, just to show you an example, on a $400,000 house, the mortgage payment is going to consist of mostly interest in that first, say, decade of paying your mortgage. Not only that, but there are costs like paying your down payment. That's an opportunity cost of putting money towards that home over investing it in something else. Homeowners insurance. So that's why you want to plan to be in your home for a longer period of time, because of all those costs that are kind of front loaded on in the beginning of owning that home. Then if you're going to move, before you even can start to benefit from appreciation and paying down more principal, then you kind of may have been worse off buying the home over just renting a home for a few years. So it's really important to take inventory of where you're at in your life. Could your job take you somewhere else sooner than you think? Are there any things that are up in the air with you needing to leave because of a family member or because of a job or having kids? These things can really change the trajectory of you needing to own a home or not own a home anymore, and where you need to own a home. So that is an important consideration. So as we've learned, housing prices can decline in the short term. Yes, over the long run, it's great to be a homeowner. You lock in that 30-year fixed mortgage payment. You have a hedge against inflation. Doesn't necessarily mean you're going to have positive returns because of costs and maintenance. But like I said, those are two different things. Appreciation and returns are two different things. If you're going to be in your home for a very long time and you do not plan to sell it, then great. You know, you're probably not going to have to stress over timing the market or trying to figure out when and where, what, how with real estate, right? You find where you want to be, you find the house you like, you buy, and later down the road, if things change and you can refinance, great. But otherwise, you're pretty much set. But if you find yourself in a ever-changing phase of your life where you could have marriage affect your life, you could have job changes affect your life, you could have aging parents change your life as well, then you might want to make sure that when you buy that home, you're going to be able to keep that home and you won't end up in a situation, the costs up front to get in the home and all of that just don't make sense. And it might just make more sense to rent temporarily until you have more stability in your life. There's nothing wrong with doing that. So yes, this housing market since 2020 has been a wild one. Some people have benefited greatly and they are sitting very pretty. And some people are actually finding themselves with housing declines causing them major issues. So again, it goes back to that bifurcated economy that I've been talking about for a long time, where some people are fine, some people aren't. It's definitely shown very clearly in this image how there are haves and have-nots in this real estate market right now, depending, of course, on when you actually bought your home. What are you seeing in your real estate market? I'm so curious. Let me know in the comments below. And if you haven't already, grab my book, Do This With Your Money. The link will be in the description and you can grab your copy today. This book is full of stories of actual clients that I've worked with, followed up with information you really need to know that you're doing the right things with your money. There's also a journal at the end of every single chapter to keep you on track so that you know what to do next. Like this video if you haven't already, and subscribe if you're not subscribed to my channel if you want to do better with your money. I'll see you next time.